What's going on, guys? We're going to cover a very easy strategy that you can use for day trading futures, especially if you're trading with prop firms and you're trying to pass evaluations or get to those payouts. Now, there's some levels on the chart that I want you guys to focus on. Some of these levels, previous day low, previous day high, okay? Other levels that I'm looking at, daily moving averages, such as a 5 moving average, a 10 moving average, so forth and so forth. And other levels that I might be looking at might be a previous day London high or low. Okay, so a swing high or swing low from previous day. Today, we sold off during the pre-market. We created a picture perfect double bottom at yesterday's low. Okay, this here was a telltale sign that unless we crack below it, we want to stick to long-sided trades. Very, very simple. I came into today with a short-sided bias, meaning because of yesterday's low here, because we were selling off, one thing that I was looking for was a bounce off the open that got rejected and then lost this double bottom, creating a bear flag. If your bias does not come into play, it does not mean you keep attempting to short here. You keep trying to call the top here. You keep trying to call the top here. That's the worst thing that you can do, is trying to go against the trend. The better thing to do is say, my bias is out of play for this short period of time. I need to flip my bias and try to find long-sided setups as long as I'm above this double bottom. Okay, now the strategy that we're going to use here is a couple of them, right? So it's using these levels, but it's also using chart patterns. Basic technical analysis 101 has nothing to do with order flow, has nothing to do with the news, has nothing to do with a special fancy model or indicator, just simple old school trading patterns. What are those old school trading patterns? Something simple as looking at when price action on a small time frame, so in this case we'll look at a 5-minute time frame on the right hand side of the screen, when price action gets above VWAP. Very simple. Everyone, I think, already understands what VWAP is. You guys already have either used it, looked at it at some point in time, but you know what it is. So what you're looking for is a reclaim or remount. I like to say remount, a remount of price over the VWAP. Okay, when you get to trading over VWAP, the next step that you're looking for is a pullback. You have to see the pullback, and this is what I call a break and retest, right? Very simple strategy. This also creates a little bit of a flag pattern, and what you're looking for is to see, does price action catch and hold at that VWAP after a remount. Okay, if price action breaks VWAP, catches and holds, great. We're looking for longs coming out of that. What's going to be our entry? Our entry is A, when we take out the high of the candle that remounted VWAP, which would be here, or after you pull back, if you're a little bit more aggressive and you're a little bit more experienced, you can catch a little bit of a better price once price action dips below VWAP and then starts to trade over, because now you have a very clear stop. It's going to be the wick that retested after remounting. Does that make sense? So this becomes your range. As long as you are trading in or above this range, you are holding long. And then you are looking at your chart and going towards previous levels, higher time frame levels, to treat them as targets. So in this particular case, the level that I had on my chart that was after we remounted VWAP was the daily 5 SMA. So I run a daily 5, a daily 10, and a daily 20 on my charts, and this helps me give targets. It helps also act as supply and demand. The next area that you can target can definitely be a previous day high, a previous day low, depending on if you're long or short. The next setup that you're going to find is going to be the same kind of scenario, but when you break and retest a daily 5, a daily 10, a daily 20, you can use those areas as confluence. Okay, so if you use those areas as confluence, Then when you break the daily 5 like we did today on the 2nd of July, that was here at 710, you're waiting for it to pull back and hold the previous 5-minute candle, and that can be used as a stop loss. So in this particular case, this was a 20-point stop loss because the range from low to high was 20 points and a half. 20-point stop loss, basically putting your technical stop loss break and trend here, entering on the confirmation of the candle that broke the daily 5. Very, very simple. Again, same thing. You can target a previous swing high from pre-market, swing low from pre-market, depending on if you're long or short, previous day high, so forth and so forth. You can also put a fixed amount. Let's say, for example, if you're risking 20 points, and let's say with the number of contracts that you're trading, you're giving up $150. Then maybe you can target $75, $100, a 1-to-1 at 125. However you want to mix and match how you're going to take profits and put stop losses is on you. But that's the technical way to say, okay, this trade is invalidated if I take confirmation and it loses the previous 5-minute candle low. That's invalidation, okay, in the way I trade. So for me, I don't want to get into a trade and then have it trade all the way back down and close below that candle, because now it kind of has just broken structure, broken trend. I want to see a continuation of that pattern. Those are the two setups that I was looking at today. Those are the two setups that I took. Now, again, I don't look for big moves. Definitely, if you look in hindsight, this is just a day of, I should have got long here and then just sold at the top, right? Not that easy. I think all of you guys know that. So for me, on these two setups, I took 10 points and I took 10 points, wrapping out 20 points, trading one mini contract. So not a bad deal. We're looking at $300, $400 after everything's said and done, fees, commissions, this, that, and the other. Again, I like to, if I can find these trades and I can make $200, $300 in a day, I tend to stop trading because I don't want to push my luck, right? I don't tell myself that, well, these two trades worked out, maybe the next one's going to work out, maybe the next one's going to work out, maybe the next one's going to work out, because it's only going to take one losing trade, especially if you operate a little bit of a negative risk to reward ratio where you're going to completely wipe yourself out, put yourself on tilt. I have one space available if you guys want to join Evolution Traders. There's a course in there outlining all of my strategies. You can trade with the community. We do lives a few times a week where we do some live trading, and also it's a very interactive community. A lot of support goes on in there, a lot of things that you can learn. I have one space available for July. That link is down in the description box below. Also, Apex is 80% off. If you guys need evaluations, you can use code DAnthony. And until next time, guys, trade safe, trade smart. I'll see all of you guys on the next video.